Lithium Americas Corp stock is currently trading at $4.76 per share, representing an intraday upward movement of 2.37% during today's active New York Stock Exchange session on this Thursday afternoon, May 21, 2026. While the daily chart shows a minor relief rally from the recent slide, the hidden reality under the surface is a massive divergence between institutional accumulate-on-dip behavior and retail panic selling. Most Main Street investors are staring at their self-investing screens watching the spot price of lithium drop, assuming this junior miner is dead in the water until car batteries dominate the world. But if you look closely at the institutional order blocks clearing through major networks, large asset managers are quietly positioning themselves because of a highly specific, newly adjusted capital expenditure buffer that the retail market completely misinterpreted during the last quarterly report. The standard expectation framing this asset right now is simple and deeply pessimistic. People look at Lithium Americas Corp stock and see a speculative mining play facing multi-year delays, regulatory friction, and an electric vehicle slowdown that has cooled off global demand for battery materials. The common consensus is that you should stay away from early-stage resource companies that do not generate active cash flow, especially when interest rates are higher and industrial projects face supply chain inflation. You see this narrative all over retail investing sites and public forums where people complain about share dilution from ongoing at-the-market equity programs. The common belief is that until millions of clean energy cars roll off assembly lines, keeping capital in a pre-production mine is dead weight. But the deeper reality challenges this thesis entirely. What the market is ignoring is that the company just posted a breakthrough in cost optimization during their first quarter of 2026 financial report, dramatically narrowing their net quarterly loss to just over $400,000, compared to over $10 million during the same stretch last year. More importantly, their massive Thacker Pass asset in Nevada is moving ahead with over 1,300 active workers currently on site, scaling up toward a peak workforce of 2,000 people. The real catalyst isn't just local mining, it is the strategic backing of General Motors and a multi-million-dollar conditional loan commitment from the United States Department of Energy. When you see major global corporations and federal entities securing long-term supply agreements for domestic resource production, the standard retail panic about near-term price fluctuations begins to look like a massive disconnect from the long-term industrial picture. Looking directly at the recent stock movement, the asset has experienced intense volatility over the past few weeks. After hitting a local high near $6 earlier in May, the price experienced a sharp multi-day slide, slipping beneath its 15-day moving average. This selling pressure intensified following the first quarter report, where the company updated its capital expenditure guidance to reflect a $110 million upward revision due to persistent inflationary pressures and potential tariff exposures. Short-term traders using basic online investing apps saw the rising costs and immediately dumped shares, pushing daily trading volumes well above their 9-month averages, with single-day volume spikes crossing 28 million shares. This heavy selling volume was compounded by external macroeconomic pressures, including surging U.S. bond yields and oil prices climbing past $110 a barrel, which naturally sucked liquidity out of speculative high capital intensity development projects. However, this sector-wide sell-off overlooked the structural resilience of the business. The company holds an incredibly robust liquidity position, boasting a current ratio above 7. This indicates they possess more than enough short-term capital assets to cover their immediate liabilities as construction moves ahead. Major institutional funds, such as large strategic commodity exchange-traded funds, have maintained or expanded their holdings, recognizing that short-term market swings do not alter the physical volume of critical minerals locked in the Nevada clay. To fully understand why this creates such an interesting setup, we have to look at what this business actually does and how its core operational structure is set up. Unlike diversified global chemical giants like Albemarle, this specific corporate entity is entirely focused on bringing North America's largest known lithium deposit into commercial production. The flagship asset is the Thacker Pass project, located in northern Nevada, designed to establish a fully domestic, industrial-scale critical mineral supply chain right inside the United States. The business model centers on developing this massive deposit, processing the raw material into battery-quality lithium carbonate, and supplying it directly to domestic auto manufacturers via exclusive offtake agreements. The strategic importance of this asset cannot be overstated. By establishing a localized supply chain, the enterprise effectively allows domestic car manufacturers to bypass geopolitical bottlenecks and qualify for federal clean energy production credits. This unique structural advantage is exactly why General Motors committed hundreds of millions of dollars to the project, securing exclusive rights to the first phase of production. Historically, the entity underwent a massive corporate transition in late 2023, splitting its Argentine assets into a separate corporate structure to leave the specific ticker as a pure-play bet on American industrial independence. Comment below how many shares of Lithium Americas Corp stock you currently hold in your portfolio right now, or if you are waiting for the spot market to stabilize before making a move. When you evaluate this company alongside large-scale retail platforms like Fidelity, Schwab Intelligent Portfolios, or Robinhood, you begin to see how different tiers of market participants approach early-stage mining assets.
For instance, an investor utilizing a Schwab Intelligent Portfolio Setup or Basic Fidelity mutual funds might only receive indirect exposure to this space through broad material indexes, which blends this highly specific domestic project with legacy global miners. On the other hand, active traders utilizing a Robinhood stock trading account or Interactive Brokers stock trading tools are frequently trying to time the exact bottom of the daily swings, reacting to every single headline regarding global commodity pricing. This constant friction between short-term retail liquidity and long-term industrial capital creates unique opportunities for self-investing portfolios. Active trading platforms like the SoFi trading platform, Robinhood app, or Interactive Brokers platform show high retail participation, which explains why the stock experiences dramatic single-day retail liquidations whenever a headline mentions inflationary pressures or newly proposed steel tariffs. Yet, when you look at the sophisticated analysis tools provided by institutional-grade setups like the Interactive Brokers account or Fidelity Wealth Management Services, the focus remains entirely on project execution milestones, funding tranches, and the underlying net asset value of the physical deposit, rather than weekly price fluctuations. As we look toward the future outlook, the ultimate trajectory of this asset will depend entirely on how reality resolves against the current market narrative. There are two distinct paths ahead for this junior miner. In the bullish scenario, the enterprise successfully navigates the remaining construction milestones at Thacker Pass, draws down the full value of its Department of Energy loan facilities, and begins scaling commercial production of lithium carbonate by the late 2020s. If the management team achieves this while keeping further equity dilution to a minimum, the reality of becoming the dominant domestic supplier of battery materials will far exceed the current depressed market expectations, potentially driving a massive re-rating of the stock price for patient investors who utilized online investing sites to accumulate shares during the current downturn. Conversely, the bearish scenario cannot be ignored. If general inflation continues to escalate, forcing further upward revisions to the multi-billion-dollar construction budget, the company may be forced to rely heavily on its at-the-market equity programs, continuously diluting existing shareholders to plug capital shortfalls. Furthermore, ongoing reputational and legal risks, such as recent criticisms from non-governmental organizations regarding tribal land consultations, could introduce unexpected regulatory friction or operational pauses. If these capital overruns and execution delays become the dominant reality, the asset will fall short of even the current modest market expectations, leaving investors exposed to prolonged capital stagnation. To bring this all together, the central insight regarding Lithium Americas Corp stock is that the market is currently pricing it as an unstable speculative biotech-style bet, completely ignoring its structural role as a national security asset for the domestic industrial supply chain. The short-term expectations are dominated by fear over rising costs, global commodity pricing, and temporary electric vehicle market plateaus. The underlying reality, however, reveals a tightly managed corporate structure that has dramatically reduced its operational losses, secured powerful corporate and federal backing, and is actively pushing over 1,000 workers to construct a premier industrial facility in Nevada. While the daily fluctuations across online investing platforms will remain highly volatile, the massive contrast between short-term retail anxiety and the long-term industrial reality offers a profound case study in market psychology, proving that the true value of an asset is rarely found on a daily ticker screen. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell, subscribe for more updates.